Welcome back to Squawk Box this morning. Stocks remain very close to record highs, and that begs the question, where are top money managers turning for results? Joining us right now to talk about it is CalPERS CEO Marcy Frost. He oversees the nation's largest pension fund at more than $470 billion. Marcy, it's great to see you. I think we're all trying to make sense of where we are in this market, given that we are clearly, I don't want to say near a top, but factually we are at a top. The question is, does it go up or down from here, and how you're thinking about it?
Yeah, good morning, Andrew. But the way that we normally look at our portfolio is really through this upside-downside analysis. And right now, we believe that there's limited upside and that we're much more concerned about the risk to the downside. So we do not have a lot of intentional tactical allocations happening today relative to our benchmarks. But remember, we have about 60% of the portfolio still exposed to equity risk. We have some, obviously, in fixed income, and private equity still remains a top performer, even with our fiscal year returns that we announced at 21.3.
When you talk about that upside, downside risk, how do you see it in terms of, to the extent that I don't know if you're calling for or thinking a correction could be in order? What's the downside look like to you right now? What's the upside look like to you?
Right. So we, roughly 80% funded as a pension fund, something that we pay very serious attention to. That downside risk is much more dangerous to us than shaving off a little bit of return. So as you indicated earlier in the segment, we think that valuations are historically lofty, and we are not bearish necessarily, but we do believe that we're not being compensated for the risks that we'd be taking. So we have taken a little bit of risk off the table and started to put in more downside protection, thinking that the markets will begin to normalize in 2022.
Shepard Smith here. Thanks for watching CNBC on YouTube.